Hey everyone, welcome back to the Hashrate Happy Hour Podcast. This show is brought to you by Giga Energy, a leading electrical manufacturer focused on Bitcoin mining. The team over there will get you all taken care of for your electrical infrastructure needs to get your Bitcoin mining operation up and running. This week on the show, I had the pleasure of sitting down with Joe Sullivan, the Vice Chair of the Minnesota Public Utilities Commission. I was absolutely thrilled that Joe took the time to have this chat with me about all of this, and we started the episode off with a deep dive into the new Meta, that is Facebook, data center coming to Minnesota and how they established their rate rider. We also then get into all sorts of discussions about renewables, ancillary services, how Joe thinks through large flexible loads on the system, and many other topics. And honestly, we just ran out of time. And so Joe and I are absolutely going to have to schedule a follow-up conversation to keep the discussion going. Today's podcast is brought to you by our sponsor, the Texas Blockchain Council, a Bitcoin-first nonprofit industry organization working to make Texas the jurisdiction of choice for Bitcoin mining and blockchain innovation. They will be hosting North America's premier policy conference for Bitcoin and the digital asset ecosystem on November 15th through the 17th in Fort Worth, Texas. For more information, please visit their website at texasblockchaincouncil.org. Hey everybody, welcome back to the show. Like I said in the introduction, I am super excited today. I'm sitting down with Joe Sullivan, the Vice Chair of the Minnesota Public Utility Commission. Joe, welcome to the show.
Oh, it's nice to be here, Ben. Thanks for inviting me and inviting the commission to come and speak to you and your guests, or your listeners, I should say.
Yeah, well, the pleasure is all mine. I can assure you of that. I'm very excited to have the conversation. I do find that my show tends to have more of the Bitcoin mining side of the industry is more interested. So I was very excited to be able to speak with you. And do you guys call it PUC or PUC? Just
we just call it the PUC or the commission. A lot of times we'll call it the commission.
The commission.
But there are some states where they call it the PUC.
I thought maybe the state of hockey.
Yeah. Yeah, Minnesota, we tend to we say the PUC or the commission.
All right. So that's thank you. That's helpful because that's it's a little bit of a mouthful. So we'll probably stick with the commission moving forward. But yeah. So Joe, I actually, I want to start with maybe just some hot news for Minnesota. I am a subscriber of your guys' newsletter, and I got the the little short article about the new Meta data center that came to town.
Yes.
And
approved yesterday.
Hot off the press. It's October 13th for the listeners. Maybe say a little bit about that. It's exciting.
Yeah. I mean, what I can tell you is that, yesterday we took up the decision to approve the competitive rate rider for the data center. It's going to create a lot of jobs, about 1,000 construction jobs. I think about 50 permanent jobs once it's up and running. And I think that Meta's long-term goal is to expand at the facility. So it's from the perspective of the regulator, what we look for is, obviously it's got to comply with the state statute, but what we look for is there a benefit for all ratepayers? And it was very clear that, there is a significant benefit to ratepayers. There's, when you look at the costs and the benefits of the facility, the benefits outweigh the costs, and that accrues to all ratepayers. So it'll be a source of load. I think Excel has said that it's going to be one of their largest. It'll be one of their largest load centers. Having that growth in electric sales is good for all ratepayers because you have those costs that are expanded out now, or that are spread out
units,
over. Yeah, more units, exactly. So, and very excited about it. I'm looking forward to them, moving forward. And I think it's, it shows that, you can do big projects like that in Minnesota.
Yeah.
Yeah. So, yeah.
And that one, so I guess it's like two questions. Do you know the total capacity? And it's like right here in the Twin Cities. It's like right in the metro.
It's in Rosemont. It's actually pretty close to the refinery. I do know the total capacity. I don't think that's public, though.
Okay.
But
Got it.
it's but I mean, it's one of the five largest sources of, or 5 or 6 or 7 largest sources of load on Excel system. So people can imagine. I mean, it's big. I mean, it's a lot of load. So
yeah.
It's a lot of load.
Oh, that's like I said, it's exciting, hot, off the press news. And I'm at the risk of jumping ahead in some of the things I wanted to ask you about. I'm probably just going to end up jumping right into some of this. You mentioned the competitive rate rider,
right?
Talk to me about like how does that get put into place? And that was something that you guys approved. So I'm guessing Meta Excel worked out, what a rate case could look like, or the rider could look like, and they bring it to you.
So the company will propose a rate. Meta obviously looks at that and says, yeah, that's something that's, where we want to be. And then the key of proposing that rate, and I would say that the key to getting that rate approved is that there is a benefit for all ratepayers, that you cannot go below, a utility in proposing a special rate cannot go below their costs. Like that's the difference. You can't kind of try to lure them in by going below your costs. And the reason for that is because, we have in Minnesota, all rates are to be just and reasonable. All rates are to be inclusive of all of the costs that the utility has to have, plus a small amount of, plus the utility profit.
Sure.
So what you cannot go below, you can't go below that cost. But the benefit to the rate is that, the benefit of the, is if you stay above, that threshold, and, you are, utilizing or using the amount of energy that, you've claimed to be, the key is, I should say, that it shows that, I've got a couple thoughts in my head. The key is that the rate that you offer is as low as it possibly, as the utility can offer it, inclusive of all of the utility costs, but that if you hit that sweet spot, there's still a benefit to all ratepayers, so that all ratepayers can see the ability for downward pressure on their own rates. That all costs are being included, all appropriate costs are being included for that end user. So when you go into a situation with a competitive rate rider, it's a highly fact sensitive. It's highly, you're looking at very specific things, what that user needs, the type of infrastructure that utility or that user needs, and then you're looking at overall system costs, and you're really kind of putting you're really putting the screws down to make sure that, I mean, we always put the screws on to make sure that people are getting just and reasonable rates, but you're going in and saying, okay, well, this is the lowest rate that we can offer and still be above cost, and that's the formula for a potential formula for a large user.
Sure.
Is that their ability to come in and still show that there's benefit for everybody, but this is this lowest rate that they can offer.
Now, I would imagine Meta has either a small team or a team that's like pretty dedicated to just going in and building and establishing the relationship with Excel, establishing a relationship with your team and your, the commission.
Yep.
Is that the case? Is that correct? Like they have a team
not with the commission.
Okay.
But with Excel, they will develop something with Excel, and work with Excel on it for sure. And then they have to propose that in the docket. They have to make their case that there's a statute that they have to follow, and one of the requirements is that that the benefit has to accrue. A benefit has to accrue to all ratepayers. So then they have to make their case, and the main entity at the state that looks at whether or not there's a benefit to all ratepayers is the Minnesota Department of Commerce, and they do their analysis, their accounting work, to make sure that yes, indeed, there is a benefit, or no, there isn't a benefit. If there is not a benefit to all ratepayers, then the competitive rate rider cannot be offered.
Interesting. Okay,
but it's the department that will then come in, and it's like a court case. That the company and the proposer, the project proposer, present their case. The Department of Commerce comes in and looks at it, reviews it, and then files comments that say, yes, it does meet the statutory requirements, or no, it doesn't meet those requirements. And in this case, the department looked at it, they did their analytical review, did the accounting work, and they said, yes, there is a ratepayer benefit for all Minnesotans. And then it passes that plank of the statute.
And is it then at that point it hits your desk, or rather it hits the commission?
It hits the commission when there is when you move along in a docketed proceeding, it hits the commission after the filing and the comment period is over, and then it comes to the commission. So, and the parties are all working together and trying to, they're both filing comments, and oftentimes they're trying to negotiate and say, okay, well, I see what we did, we're going to redo it. And then they can kind of come together. And then by the time it gets to the commission, if they found agreement, they will make us aware of that. They say, yeah, we had this disagreement, but we figured out, a pathway through it. Or if we didn't figure out a pathway through it, now this is a decision. This is a contested decision that the commission needs to weigh in on and say, in your judgment, who was right or who was wrong, or what's the way forward.
Oh, okay.
Yeah.
Well,
but a docket like this can take, takes 6 months, a year. It can take a while. I don't remember when this original docket was filed, but if you look at the docket number, the first 2 digits will tell you the year that it was filed, and I think this was a 22. So I think it was filed last year.
Do you happen to know? And I totally understand if you don't, but do you happen to know if something like this type of a project did Excel, the Minnesota Excel team, like, are they out hunting for new business per se? Like, are they out saying either they lost a load of this size or a handful of customers that totaled up to this load, and they said, all right, business development team, go find us a customer?
I mean, I don't know how Excel does it internally, but I would anticipate that, that they have teams and they have groups, folks who are charged with that, with business development. But I don't know for sure. I don't know.
Okay.
One way or the other. Yeah.
So I appreciate it, Joe. I completely jumped you right out of the gate. But
no, that's okay.
Yeah, this was super exciting to see this come across, and I'll explain why I personally was so excited about this. Not that I'm a big Facebook fan. It's that it's really exciting to see. And like you said, one of the top 5 largest loads come to a very, urban area. I mean, that's right here in the Twin Cities. It's not like this is out in the middle of nowhere, Minnesota. And it has a lot of overlap in its characteristics of Bitcoin mining. So for me, I was like, ooh, well, that's really exciting to see that. So thank you and I'm sure I will circle back to that because I think it provides a nice example and some framework for some of the other things I'm curious about. I want to back.
So that docket was a 2022 docket, just like I said.
Oh,
so
okay.
yeah, so they opened it up last year, and then the from the beginning of when the docket was open to today, it took some time. But I don't know when I'd have to look deeper, like when during the year, but they're docketed proceedings, and there's a notice and then comment and then reply and reply. There's multiple, opportunities for people to reply and for people to discuss and negotiate with the parties. And so it takes some time, but yeah, so that's kind of a good way you can see how, Meta, brought the project to us last year.
Yeah. Timeline is definitely a big factor here. And I think it's, I'm not going to even dare to speak on behalf of the Bitcoin mining community, but the Bitcoin mining industry is still somewhat adjusting to longer timelines and longer procedures for, things like new riders or just new rates in general.
Sure. Yeah.
And then even just procurement. The industry is very accustomed to like ultra fast procurement of, just infrastructure, where I think, a lot of utility companies will probably tell you that they still have 12-month lead times on things like transformers and the upgrades, like the material for substation upgrades and things like that. So
right,
it's an adjustment, that's for sure.
Yeah.
To work on large timescales. So Joe, I completely blew by this, and I do want to hear your background. I would love to hear what your background is, and then like what got you excited about electricity, energy, because you've been in this space for a long time.
Yeah, no, I mean, my background. So first of all, I should probably just let people know what the commission is.
Oh, yes.
And so the Minnesota Public Utilities Commission, it's actually the state's oldest regulatory body. It was founded in the late 1800s as the Railroad Commission. And the commission regulates today electric, gas utilities, as well as telephone. What's left of old telephone service. We don't regulate cell phones, and we don't regulate broadband. But we also cite and approve large power projects or pipelines, transmission lines, power plants, wind farms, solar facilities. So the commission has a significant amount of authority over the energy system in Minnesota, but specifically it's the power sector and the natural gas heating sector. We don't regulate delivered fuel, so that would be like propane, but we do regulate natural gas service that comes through gas utilities like CenterPoint or XL Gas, Greater Minnesota Gas, companies like that. So the commission, and we're economic regulators of those entities. So we look at the rates that they charge. We make sure that they charge just and reasonable rates, and that means that they're not charging above or below cost, that they're charging cost plus a little bit of additional charge for
a profit margin,
the profit margin and the cost of capital and their return on equity, and we regulate whenever a large transmission line or pipeline is proposed, making sure that those are consistent with state law. Some of the big things that are up right now are like there's carbon pipelines that are before the commission. large transmission lines that are before the commission or coming before the commission. They're in the docketed process. They've been, they're early in the docketed process, and we do our work as a commission. There's 5 members of the commission. I'm one of the 5. I'm the vice chair, and we're appointed in staggered terms. So every commissioner has a 6-year term, and there's 5 of us. So every year, except for the 6th year, there's a commissioner who's up and will be, replaced by a new commissioner or reappointed.
Sure.
I was appointed 3 years ago, 3.5 years ago. I'm coming up on my 4th year. And the Governor Walz appointed me, and then the Minnesota Senate confirmed me in 2020. So it's as a regulatory agency, we process about 900 dockets per year. So of those, the vast majority are on the consent agenda, which means that there's no controversy. This is like when a utility just needs to do something that the public needs to be aware of it, but it doesn't. There's no controversy. So they kind of could be just a basic like regulatory requirement from the US EPA that they have to implement or anything like that. And then about 300 of the dockets that we process are contested, or that there's an issue that needs to be discussed amongst the 5 commissioners. So we have a staff of about 70 right now, and our work is all done we're like judges. So it's, we have contested cases and matters that are very similar to it's a legal proceeding before the body, and we review the material much like a judge would. So we often say that we have a quasi-legislative, quasi-judicial role.
Yeah,
and the work that we do, though, is often, always, the Minnesota Department of Commerce is the public advocate in Minnesota, and what they present the state of Minnesota's case to the commission, which is kind of weird because the commission is the state of Minnesota, but also the public advocate or the Department of Commerce presents what is the advocacy position of the state of Minnesota. So they would present on whether or not we should do a particular line or a transmission line, a pipeline or a transmission line. Mm-hmm. They'll present on when a utility does a resource plan. They'll say, this is what's in the public interest. This is not in the public interest. So the Department of Commerce serves an incredibly essential role to everything that we do. They develop the record. And then you have a number of other people who are involved. The Minnesota Office of the Attorney General is involved. And then you have advocates like Fresh Energy and the Citizens Utility Board, LIUNA, you name it, the Minnesota Department or, Chamber of Commerce. There's a lot of people who are involved in the work. And technically we sit in the place of a district court. So if somebody disagrees with us, or if somebody, disagrees with the decision, our decision is appealed directly to the Minnesota Court of Appeals. So that's the commission in a nutshell. In my background, I've been, like I said, on the commission for about 3.5 years. Mm-hmm. Prior to this, I'm an attorney. I worked for a law firm for about 6.5 years. The first thing that was dropped on my desk was the documents of the file of a utility, and I just gravitated and loved the work. I think it's super interesting. I am just absolutely fascinated by the machine. That the electric system is one huge synchronous machine, and that just kind of blows me away to think that this whole thing is operating and working together. And, I love and I'm just fascinated by the machines themselves. I could just sit and look at a coal power plant or a nuclear power plant or a wind farm or a solar facility, and I just marvel at it. I think they're incredible.
That makes two of us.
It's just it's just amazing that we can do that. People have figured out how to do this, and that figured out how to keep the lights on, keep people's businesses running with consistent power, and that the system is it is extremely reliable. It's massively complex and extremely reliable, and I think that's just fascinating. I find the history of the system interesting. The history goes back. The cities were initially electrified in the 1870s and the 1880s. The countryside was electrified in the 1930s and 40s. And, a lot of that history and the development of monopoly utilities, I find just absolutely fascinating and really important U.S. history, why utilities developed as they did and how we regulate them has all been really important to the history of our country. I find the economics around it interesting. I find the accounting of the system, like how we account for the system, and the how we look at the books of the utilities interesting. And I just think it's just a super fascinating thing. And it started with that, my boss at the time, putting the file of that utility on my desk, and I just gravitated to it. But it probably started because I just love machines first and foremost, and then I just got into it. So,
and now a quick word from our sponsor. This show is powered by Giga Energy. Giga Energy is a vertically integrated Bitcoin mining company that manufactures all of the electrical infrastructure needed to start mining Bitcoin. Whether that's medium voltage switchgear, PDUs, or power cables for your miners, the team at Giga Energy has you covered. Reach out to their sales team today for all of your electrical infrastructure needs at sales@gigaenergy.com. Use the word hashrate for the subject of the email, and you'll get 5% off your order. All right, now back to the show.
It's cool. And yeah, I mean, Joe, I think, I forget exactly how long ago you and I had lunch, and we actually geeked out for most of the lunch over some of the history of, fighting over AC and DC power and patents over light bulb. I mean, it's such a deeply fascinating subject. And then I really, for me, I sit back and I look at it's just the internet. What we're doing right now, we're recording a podcast episode virtually. You're a couple hundred miles away from me, and we're doing it as if it's in real time, like we're sitting across the table, and that's all running on electricity through a data center somewhere. It's so fascinating. Yeah.
It's amazing. And I very specifically use the word marvel. I marvel at it. Mm-hmm. It's like magic. It's just incredible.
Yeah. Yeah. Well, I appreciate the deep dive on your background, and especially the walk through the commission. I think that, as an entity, it's not always clear to people. Like, I think people may or may not have a grasp on how, the electricity works in their house, but then they get the bill every month, and they may not fully understand that. So I appreciate the walk through, what that process would look like. So I kind of want to zero in maybe first on what does, and we were kind of talking about it a little bit with the rate case or the rate rider for Meta being, a net benefit to the consumer. What does ultimately help lower costs on someone's electricity bill? Mm-hmm. And what help? And I guess to add to that question, I'm asking because I, for a little while, was under the assumption of, well, if we had more generation electrical generation in the state, that would drop the cost. But I don't think that that's accurate.
More electrical generation spread out over the same number of kilowatt hours will increase your costs in the system that we're in. It's because the utility has to recover all of its costs. So if it's got the utility, it has to recover its just and reasonable cost, the cost that it incurs that, to deliver service. It's law. It's not only is it state law, but it's U.S. constitutionally protected that they recover all of their costs, the costs that they incurred to provide service. So if we have additional generation on the system that's just over and above what we need, it will cost people more. I mean, that's just what it will do. And because the utility will cover those costs, will recoup those costs, and the commission will have to approve it. If it's used to provide provision service. But I think the way that we can make sure that rates are fair, that people have control over their bills, there's a number of things that we can do. First and foremost is that you want to make sure that the generation that is serving individuals and serving people is the least cost generation. And one of the things that's so great about renewables is that they have no fuel price, and that savings gets passed directly on to ratepayers. So if you think about your bill, the bill that you get, or the rate that you charge, is about 40% of that are the general rates that whenever people see a story in the Star Tribune that says Xcel's rates have gone up, by 20% or 15%, that's the general rates. So that's about 40% of your bill.
Yep.
Then about 20-ish% of your bill are what we call riders. And riders are those are recovery mechanisms so that the utility can recover their costs in between a rate case. Because rate cases can sometimes last, rate cases before a utility might do a rate case in 1 year, and then they don't do a rate case for another 5 or 6 or 7 years. But there are certain costs that they need to recover in between, and we do riders for them. So we allow them to recover those costs in riders. And those things might be like policy initiatives where they need to recover their costs. Other things would be like transmission. They might need to build some transmission. On the gas side, sometimes roads get torn up during construction, and gas infrastructure has to get moved because of that, and that's not knowable in the way that you need to know things with a rate case. So we allow them to do a rider. It's called the GUIC rider. It's inartfully named the GUIC rider, but we allow them to do a rider that lets them build those costs into rates through the rider in between rate cases. Conservation is also charged in a rider. But then the final about third of a bill is the fuel costs. And the fuel cost is typically just a direct pass-through. And that's the fuel to run the entire system, to power the entire system. The uranium pellets, the coal, the natural gas, you name it. That's the fuel. And if you can use base rates, your investments in base rates, your CapEx investments in base rates, to build generation that does not have a fuel clause, you can in effect compress and reduce your rates, because the all-in rate, where you include the third for the fuel, the 10 or 20% for the riders, and the 40% for the base rates, or whatever the math actually works out on that. But if you can include all of that, if you can and you can reduce the amount you're paying in fuel,
Mm-hmm.
then you could see some base rates increase, but your overall rate to a customer is going down because they're paying way less for fuel.
Sure.
And companies like Excel, when you hear companies like Excel say things like steel for fuel, that's what they're really saying. They're saying we're building steel so we don't have to buy fuel. And that means we're building a resource that doesn't have a fuel price.
I actually appreciate you explaining that because I have seen that and kind of scratched my head over
what does that mean?
Over the messaging. I was like,
what does that mean?
I don't know.
And it requires requires a deep understanding of the system for you to get it. So maybe they need to change different. They need to rethink how they what they say. But anyway, it sounds cool, steel for fuel. But so that's one way, is that good investments on the front end, investments that are smart, that have zero or very low fuel costs, are a way that you can see an increase in base rates, but that you can reduce or put downward pressure on rates overall because you're buying less fuel.
Okay.
So that's one thing.
Yeah. And
second thing is conservation. Okay. So actually reducing the number. We always say that people pay bills, they don't pay rates. And the bill is actually the rate times the amount you used. Mm-hmm. Conservation reduces the amount you used. So if you have a higher rate, but you use, 1,000 fewer kilowatt hours a year, you might actually pay a lot lower bill. Just like, if you have a car with really good gas mileage, you're less, you're less susceptible to higher gas prices because you already get really good gas mileage in your car. So that's another way that people can control the amount of their bill. And then the last thing is like certain investments, like, if you want to do generation yourself, you can, there's investments that people can do in solar and stuff like that. So
sure.
Sorry for the long answer.
No. I appreciate it. It's what I wanted to maybe ask is because solar has been out for a while. I guess, are we seeing examples of kind of that zero cost for fuel, impacting the rate that way?
Absolutely. What you see in Minnesota is Minnesota has seen an increase in, especially for industrial customers, and I think this is important for folks who care about Bitcoin, is there has been an increase in industrial rates for industrial customers. And there's been, and you see increases in rates across the board. Residential rates are they're up, not as much as some of the other classes, but there is an increase in rates. But the bills that Minnesota pays almost for all customer classes that I'm aware of are about the same or down compared to the way they were 10 years ago. So we are seeing an increase in rates, but the actual effect on somebody's pocketbook or a company's pocketbook is inflation adjusted. It's probably down from 10 years ago, 20 years ago. Is that the effect of our conservation programs, the effect of capital expenditures, procuring wind and solar. And I mean, Minnesota has, almost 30% of Minnesota's generation fleet now comes from wind. And that's 30% energy on a yearly basis. That 30% energy gets billed back to the CapEx to build those wind farms, gets billed back to you in in your base rates.
Yeah. Yep.
But the fuel doesn't get billed back to you because it didn't cost anything. So that's how that. So you are seeing that.
Yeah, and I appreciate that. Is there? So I know with the renewable sources of generation, there's a lot of intermittency.
Yep.
maybe touch on how that starts to get a little bit complicated, and well, maybe from the lens of like complicated meaning you need to have a balance, there needs to be a balance, right? I don't think we can go to can we go to 100% renewable grid? Because I think we need to cover some of the like the spottiness, right?
For sure. I mean, I think we can get to a 100% or nearly 100% carbon free grid, but having 100% renewables, I don't think that's in the cards for a long time. One thing about renewables is that they're great at providing energy, low cost energy, but they don't provide a lot of like the ancillary services and the capacity that other older, more traditional power plants brought. So like a big old coal plant, you got a ton of energy out of that, and then you got capacity, and then you got voltage support. You got reactive power. You got a lot of benefits out of that one power plant. And the way that we pay for power is we pay for the energy, and then we got all these other things for free, basically. We got all these other benefits for free because they were just inherent in the machine, in the coal plant or in the nuclear facility. They're just inherent in that machine. And as we've moved to energy that costs much less, it's like has a zero fuel price, we're starting to have to deal with, well, wind and solar have different attributes. They have a lot of really great attributes, and they can provide some of these services, the ancillary services, but it's different. And that requires a much more deeply interconnected grid, more transmission, which, by the way, transmission is still, it's the lowest cost resource on the system. So wind plus the cost of new transmission still costs less than an old traditional generator. So the system gets more complicated, more complex, and that's why there is such a drive and a need now for ancillary services coming from other places, for capacity coming from other places. That's why we look at it's just more complicated, and you're seeing the needs coming from different places, and some units that are just going to provide some ancillary services or are just going to provide capacity benefits. They're not going to be running very often. So yes, it's getting more complicated.
And where I was going with that, Joe, was actually the ancillary services portion. I think, so again, kind of keeping the filter of like Bitcoin mining, or just keeping that in mind is, so ultimately what I was getting at was, maybe leading to a discussion about the ancillary services, Bitcoin mining. Again, you and I at lunch, we chatted about this. It's this ultra flexible. I mean, the ramp rate on it, you can ramp up and down within, 60 seconds. And you're talking even up into the 50 megawatt range. You can ramp up and down in just extraordinary time. And so just curious that, like, when you hear that from your chair and your position, do you hear that as a benefit, or what do you think about when you hear about that type of a load being on a grid system?
That a type of load that brings ancillary services?
Yeah, and very, very large, very flexible load. Just be curious what you think about when you hear things like that, or
Oh, I mean, I think very favorably about that kind of stuff. I mean, I think that, the system, as the system is developing and evolving, it is moving towards needing flexible load and flexible generation. It is absolutely, it's moving in that direction. And load that is more deeply interconnected to the system. So I think very favorably about those types of load, those types of projects. I think that's critically important. When I think of ancillary services, like I think of those as those are services that are required by the transmission or the distribution system operator that, to enable them to maintain the integrity and the stability of the transmission and distribution system, like power quality, frequency response, reactive power, voltage support. Like these are kind of nuts and bolts things that keep, pressure in the veins and keep the system up and running. Frequency response, that can be kind of, acting instantly. So like when, as we move to a system that is more energy based, because it's got generators that are more energy based because they are, like a wind or a solar facility, we need to find those critical attributes elsewhere. So, and that's what you're seeing on the system right now is the need to find that. So if, that, I find,
is
one
that
of the things that worries me is that, we don't have enough flexible load.
Yeah. Well,
or we don't have enough ability to get at that flexible load, I should say.
And maybe it's just like a checking question. Is that like that type of flexibility then would allow for a more steady state, like base load with renewables sitting on top of that? And that would allow for, and this is a checking question to maybe see if I'm thinking about this right. So you have a high base load with renewables sitting on top of that. And there's maybe Bitcoin mining taking the base load because it's not really needed. The sun's out and it's windy. And then sun goes down and consequently also the wind stops blowing and, we need to power the city still. So you drop the Bitcoin mining, the base load can then take over for where the renewables were. Is that kind of how that relationship with ancillary services all maps out?
I think of the way that I think of ancillary services and the way that I think of energy, I think of capacity, is that it lessens the need for what you would traditionally call, what we would call a traditional baseload generator. Like it's not that it sits on top of, not the wind sits on top of the baseload generator and allows it to generate like it's always been generating, but that it is actually an alternative and a replacement for a traditional generator. That the ancillary services plus the energy resource, wind and solar, plus the new transmission, that is the replacement for a traditional generator. That's the way that I think of it.
Okay.
Is that helpful to you, or is that like
it is
like in the way that that's not necessarily the way that somebody needs to think about it, but that's the way that I think about it.
Does that then, when I hear that, is that battery storage or like electrical storage then is then how you
absolutely can be a critical source of ancillary services.
Okay.
Would be battery storage. Yep. Fast acting. It can, react instantly in the moment, just like hydro. A traditional hydro generator is one of the fastest, one of the sources of generation that is the most able to react to conditions on the system.
Yeah, I think my question actually kind of stems from like what's going on down in ERCOT down in Texas, where Texas right now and ERCOT. It was really, really fun. I got a chance to talk to the large flexible load task force team at ERCOT, and they're kind of running that operating model that I just described, where they've got a base load that kind of, I don't know if you like sits off to the side until it's needed, but now Bitcoin mining allows it to run kind of all the time. So these companies can monetize that. And then when the wind stops, they can redirect their electricity to where it's needed, and the Bitcoin mining turns down. I think that's where the question came from.
So does the Bitcoin miner then pay for the higher priced energy from the baseload facility? Is that how that works? Or
they're actually getting lower cost of power for offering the services of being able to turn off and turn on. They end up getting a cheaper power rate. Texas that's almost a really bad example, because they go out and they procure like a block of power 2-3 years out, and then they're selling that in the market in real time,
right?
Which I think some of our co-ops have the ability to do that here. Like, I think the co-ops can do that here, but
one of a major difference between the Texas ERCOT system and what's going on here too is that especially in Minnesota, our last coal facility is going to be retired by I think 2031. So we're only 8 years away, 7 years away almost now from the last operating coal facility in the state. The Sherco facility will be fully closed down and converted by 2030. We have the King facility, which is on the river, just to the east of the Twin Cities. I believe that closes in 2026. So most of those traditional baseload generators that are, coal baseload generators are, they're at the end of their economic life, and there's no, real pathway for them. And that's also that's not even considering the policy of the state of Minnesota is now 100% carbon free by 2030, right? Or by 2040.
Yeah.
So, the traditional generators that in Minnesota that, traditional baseload generators that in Minnesota remain are the nuclear facilities, the 3 nuclear reactors in the state, the 2 at Prairie Island and the 1 in Monticello.
Yeah.
But like from my perspective in the upper Minnesota, or the upper Midwest grid, our neighbor states are taking different paths in regard to their transmission or transition. But we're all, in the process of, an energy transition, because the entire country and the world is. But the way that I really think of ancillary services, the way that I think of capacity and energy is that, those were all things that used to be brought by one large generator. And now they've been separated out, and lots of different people and lots of different types of projects are offering those services to the grid. And that's the way that I think about it.
Sure. Well, and I appreciate that. Again, for me, it's really nice to get other perspective, because like I said, I think, my example and or question about how ancillary services could work really stems from like what's going on down in ERCOT, where they're getting a lower electrical rate for being able to turn on and off at moment's notices.
They're deregulated.
And they're deregulated.
And they can, we in Minnesota cannot offer a rate that's below cost. So whatever that facility, whatever its cost is, you can't get a rate lower than that in Minnesota. And I think in deregulated states, that's part of deregulation, though I'm not an expert in, Texas or ERCOT style.
Well, I won't pretend to be either.
Dereg. But
it's
they're
the
not
Wild
bound
West.
Yeah, right. They're not bound by, some of the, they're not bound by the regulatory requirements that we are, and the prudency requirements that we are.
It is alarming, the difference in the cost on the power down there. It's so cheap. I don't get it. I don't, I try and I try, and maybe I need to get with the ERCOT guys again. Like, I don't know how you get 2.5 cent power. I just don't. I don't know how that happens.
Well, they get it because they don't. They have they have an energy only market.
Yeah.
They're trying to figure out how do they procure capacity in their energy only market, but they have so far they've been kind of a wash in energy and that and traditional generators, which brings along with it all those other attributes that we've been talking about. But what the downside of their market is when Winter Storm Uri happened and their system, because they underinvested in their system, because they don't have. I mean, in a regulated system, we invest in winterizing our stuff, and we invest in, we keep the infrastructure. There's a strong incentive to keep the infrastructure up to date. Texas, they have, they're on a tighter margin than we are normally.
Yeah.
That's not to say things. I mean, I worry about things happening in Minnesota and in the upper Midwest, and it could, but they're on a tighter margin. They had an energy only market, and they're deregulated, so they can do some of that stuff. The downside of that is that if you have a major event where you have significant amount of generation can't get to market, you will see a massive price spike. So there are.
And they do. It gets up into like, I think they saw $9,000 per megawatt hour.
Right. Yeah. So in a moment, they make up for the difference. You know.
Yeah.
So if you're a large industrial customer down there, you're saying, I don't want to pay this.
You have to have a power trading desk or a hedging strategy when you're down there. Yeah.
Well, and capacity is one of those things that it's something that we've struggled. Every kind of industry kind of struggles to pay for capacity because it's you don't need capacity until you really, really need it, and most of the time, it's expensive to be able to flex up to that. Like, in hospitals, like an ICU it's an expensive place in the hospital. It's like ICU beds, the critical care nurses, and the doctors that go into there. It's expensive. But like COVID happens, and oh my God, we don't have enough ICU beds. So and the same is true in the energy world. Is capacity, it is expensive, really expensive, to build a natural gas combustion turbine that only operates for 50 hours of the year. And if you don't have a market construct, or if you don't have a regulated market like we have in Minnesota, that says, we know that's expensive, but we're still we know it needs to be there, then it's hard to pay for it. And in Texas, they just didn't have that market construct or a regulated market to require that stuff to be built, or to require that it be weatherized and winterized.
I think
that's how they got in trouble.
Yeah. And so I think that that's actually where, and I want to keep a tab on the time too, Joe. You've been very gracious with your time so far, but I think like that example of having the expensive natural gas plant that only runs for 50 hours, there is an opportunity for like a Bitcoin mining company or Meta to come in and say, hey, we're going to use I forget how many, minutes are in a year, but we're going to use basically 95%, and that 5% you got to ramp up for, these events, be it a hot summer here in Minnesota or whatever. We'll shut off. And now I know Meta can't do that because they're a data center, but Bitcoin mining can.
That is demand response.
Yeah.
And that's the promise of demand response, is that you can utilize somebody's ability or willingness to be paid to shut off or be paid to use their project differently, and you can utilize that for the system's benefit. And that's the kind of flexible load that we're looking for.
Okay. Well, Joe, I think we'll have to do a round 2 because, like I said, you've been very gracious with your time. So I'll ask you, where can you point the audience so that they can either get in touch with yourself or the commission at large? I'd love for people to be able to, find out more about you guys and to be able to learn more.
I appreciate that. I would encourage people to go to the Minnesota Public Utility Commission webpage. You can get in touch with me there. My contact information is there. You can also just reach out directly to the commission, and my email address is joseph.k.sullivan@state.mn.us. I'm happy to answer questions. I'm happy to for people to touch base with me, and I think that I'd be happy to talk again, Ben. This is it's fun to chat, and I enjoy these kind of freewheeling conversations. And I hope that people reach out and take a look. We've got a lot of stuff on the Minnesota Commission on our webpage about the system and how we regulate utilities in Minnesota. And one other thing I would encourage folks to, if you're, this is something I say to anybody who has a project, a big project, or is interested in, doing construction, big industrial projects or whatever in Minnesota, is I think the most important thing that any new large industrial customer needs to do is they need to contact the utility serving that area, and start working with them and negotiating with them right away. I think that's really the key. The folks at the utilities, Otter Tail is one of our utilities in Minnesota, Minnesota Power, Xcel. Those Great folks, River, they know what they need to do to get approved, and they can work with you to build a good effort and a project, to bring to the commission. And I think it's just really important that people, they first work with those utilities that are going to be serving those areas, and they understand, that, this is, I understand people want to go fast, and we can certainly, we can go as fast as possible. But it is worthwhile taking some time to work with the utility and develop those relationships and bring us a good proposal.
Yeah. Joe, I really appreciate that. It is very important for people to use the system that is there and work within the process, because that's how this is going to work. So, Joe, thank you so much. This has been an absolute blast. Yeah. Thank you.
I really enjoyed it. Thank you so much.
All right. You take care.
Okay. I'll talk to you. Bye-bye.